This just plunged 93%. I'm your host, Steve Van Metre, and thanks for joining me today. In our lead story today, it's Morgan Stanley's emergency alert. We're going to show you what just crashed by 93% and what it means to the markets and why Morgan Stanley says you need to do this now. Plus, as we do every Sunday, we like to look at the technicals, momentum, and more importantly, the machine positioning of the markets to help you be a better trader and investor, make more money in the markets than you ever have. Now, let's head over to Goldman. I want to start today's story off with what just crashed by 93%. And here we can see in the CTA corner, again, we talk about machine positioning every week. This is critical. They're modeled long 166 billion of global equities. This is in their 100th percentile after selling a mere 1 billion last week. Now, what's critical about understanding machines from a market and trading perspective, you want to front run them whenever that's possible. Now, importantly, we give you the tools for that, but let's continue on because what we see now is issues at the buyback desk. They estimate a 30% decline in flows on their trading desk during the blackout. They currently estimate 87% of the S&P 500 in blackout. This was last week with 93%. Now this has dropped by 93% as of Friday, going into, of course, market trading on Monday because, of course, stocks were closed on Friday due to Good Friday. This means corporates are in the biggest part of their buyback blackout window ever for the quarter, and this is a big issue because if you look at the two biggest buyers of stocks, well, they're the machines. They're maxed out, as you're about to see, and corporates, which have just gone into the dark. And when we take a look at Goldman's flows, we note over the next month, and this is critical because that is the extent of the blackout window. It goes almost all the way through the end of April. We see in a flat tape, machines are only buying 1.9 billion of global equities. That is nothing, absolutely a tiny amount. In an up tape, 13 billion of global equities to buy. But look at this, anything that causes the market to shift to the downside, you're talking 155 billion global equities, 29 billion in the S&P 500. You want to talk about an impact in the markets in a big way, and then we'll take a look, of course, what Morgan Stanley, that we put out an emergency alert, what you need to do right now. But the key here is understanding what's going on with the machines. Here we'll look at some more of Goldman's estimates, this for the S&P 500. Look, you see they're maxed out. They're not going to be buying the S&P virtually in any condition, skewing to the downside potentially. If stocks have a big sell-off, watch the machines go. Even non-dealers or speculators in U.S. equity futures positioning, they're at extreme levels. Again, this is all happening as the blackout window closes. You see sentiment stretched massively according to Goldman's proprietary sentiment indicator. All these are pointing to everybody's long this market, and the biggest buyer has gone away. But Morgan Stanley says not to worry. Their emergency alert, this is what they're telling their clients, what you need to do right now. We'll, of course, put this to the test just from their weekly warm-up, as great expectations suggest more rotations. And they're upgrading the energy sector to overweight amid a combination of inflecting relative earnings revisions, strong breadth, and compelling valuation. The recent stability of crude prices also points to catch up in both relative performance and earnings growth in their view. Now, something we do, of course, is look at the technicals, momentum, machine positioning. We're going to look at this and the energy sector. Someone's in asking, will you cover the small caps? Well, my friend, for you, we've got that today. Hang tight. As you point out, the energy sector's relative performance versus the S&P 500 has lagged the price of crude year to date, giving some upside potential. Further, we continue to believe we're in a late cycle market environment, which has historically been supportive of energy outperformance, saying that Morgan's nudging everyone into the energy sector. Of course, we'll put that to the test here. Let's take a look at, of course, the big tech first, the big mega cap indices. We'll look at the small caps, then we'll take a look, put Morgan's challenge here of the energy sector to the test. And let's start out with the S&P 500. The momentum now is positive, and it still remains that way, but normally the MACD has a negative cross. Now, one of the challenges of trading these technical indicators is people get in late and then they get out early and they're oscillating around. They need something to smooth that out. Now, one thing we do is we take all these different technical signals and we smooth them out. We got the RSI, the MACD, these other ones, and then there's one special thing we add that smooths the whole thing coming out, and that we put into our Momentum Timer Pro report. And here you can see, even though the relative strength indicator is slowing down, MACD's got a negative cross. We have 51 consecutive daily buy signals on this. We showed you on this show back on November 13th how to trade this using our signals. Put a buy it open. Now you'd be up 20.76% if you followed that stop loss level. We're nudging that up a bit. Again, this is critical. You know, a lot of people, when they invest or trade, they don't hold on their gains. That's why we encourage you, use stop losses, bump them up when you're making money, because our reports show you where you can get other opportunities. Look at our machine positioning. We've showed you when these were max short, that was where the opportunity lie. Look at momentum over a 1 month period. We look at momentum over not just a daily, but over 1, 3, 6 months, and it is extreme levels. This suggesting, my friends, the market more likely to have a pullback here, but especially as these corporates go into the deepest part of the blackout period. Look at this. We've got the volume profile turned on over the last 10 days, and this, you see this red bar, this is where most shares are traded over that period of time. You can see the S&P 500 absolutely looking top heavy here as sellers continue to take advantage of this. All it takes, of course, is a lack of buyers to see the market move down. The catalyst is simple. We know institutions are in, machines are in, corporates had been buying, and of course, retail always now in at the top. You see all the indicators you need. The only question is, well, who is the next marginal buyer? Well, the problem is there is none, and this is setting up a move, an initial move down in the S&P to that next supply zone. As we zoom out to the bigger picture, is it possible we could see a potential big unwinding of this recent move down into this 470 range? Absolutely, that is indeed possible. Well, of course, we'll keep an eye on that over the next month without, of course, these corporates buying. Let's take a look at tech, because we know these tech companies, they buy the biggest number of shares. RSA continues to cool off down to 56. The MACD's got a negative cross, but yet momentum still overall is positive. This is critical. You see Momentum Timer Pro putting up 9 consecutive daily buy signals. Now, you know we have no position on this right now. Why is that? We got stopped out, and that's okay because it did go up a little more. The key is not to get every bit of juice out of a position, but to get what you can and go on to the next. We've got other things if you're looking for a trade. Our reports generate. I put a video out midweek on all the stuff we went through trades recently, gave our subscribers some fantastic options to add to their portfolio. Here we see the upside target is at the all-time high, downside target 50-day moving average. We showed you when to get in this. We showed you how to make money, and now let's just see the 50-day moving average right here below. It's been crawling up the 21-day moving average very steadily there. Again, you talk about a potential pullback. You zoom out and you can see support very clearly right around the, say, 395 to 400 level would make a nice re-entry on a pullback. Again, no point in chasing things that are already high and hoping they're going higher, because look at this. You put the volume profile on, and what do you see? Sellers are here. You take away the biggest buyer, and there's literally nothing supporting that market underneath. Let's talk about small caps. Many of you have been asking about this. I think one person in particular, well, this, my friend, is for you. Relative strength 63, MACD positive cross. You want to look for upside potential in U.S. equities? Well, maybe you need to look at small caps. Here you see Momentum Timer Pro, 8 consecutive daily buy signals. Again, we give you signals on a daily basis and on 1, 3, and 6 months. Now, notably, you see momentum across these other time periods is rather stretched. We know machine positioning is rather stretched. Is there opportunity here? Well, the charts say there is indeed opportunity. Let's take a look at IWN. We're going to zoom out here because sometimes you need to have a big picture perspective. And what does this start to look like? If you're a technical trader, if you're a chartist, you're saying, hey, wait a minute, this looks like a massive bottom, and it sure does, suggesting a move between the next two supply zones. And you'll know. And how do you know? Because price moves very quickly. Markets are full of buyers and sellers. Sellers have been right in this zone. Now, if they get pushed out and buyers take over, look for a quick move up here near this $230 range, or we have our target at 227.33. There is your opportunity on small caps if you're looking to stay in the U.S. equity market. Rotate out of those big caps, head over to the small ones. But how about Morgan's call on the energy sector? Well, let's take a look. Momentum, of course, positive. RSI, this thing is in overbought territory, meaning everyone's been cramming into the sector. MACD's got a positive cross. You've got 46 daily consecutive buy signals on Momentum Time Pro, meaning everyone's in this. In fact, you look at the 1 and 3 month window of momentum, it's maxed out. The 6 month is not far below. The machine positioning is long. The question is, what do they see? Well, they're talking more about the economy. We're talking about the charts. Let's take a look here at XLE, which is right up here. And you notably, this thing is sitting kind of near some recent all-time highs. We'll zoom into the 2-year chart. And the question here is it going to break out of this? Well, we have to go even further out. Let's go to the max weekly. And you kind of set this case up. Maybe it can get up here to 101. That could be possible. It's really a struggle at this current level. As you'll note, sellers tend to emerge right at this price level. So if we were going to move some lines around, we definitely add a supply zone up here. You can see sellers dominate right here around the current price point. Morgan says this breaks out. I say I would wait and see if it did. Now let's take a look at the S&P oil and gas ETF, the symbol XOP. And we have these all in our reports. You got tons of ETFs, different sectors, you name it, we got it. RSI, that's overbought too. MACD's also got a positive cross. Look at this, 45 consecutive daily buy signals, maxed out on the machine positioning. Now, one thing you want to do, if you're going to trade machine positioning, you want to lift these things in the max short. And then when they start to reverse, that's where you jump in, because machines push a lot of money. That's the opportunity. If you're looking to take a long position when the machines are long, remember, you're not going to get any boost from them. We're already giving you that information because we also run a historical overlay. Nobody does it. In fact, hard to get the machine positioning to begin with, but we give it to you in our reports. And there's a 30-day free trial, much to the disappointment of many of my other YouTube friends who keep telling me to quit doing that. Because, well, you're making money on trading our reports, and their subscribers, well, they quit real quick when they only get 7 days. How do you make money trading in 7 days? Pay for a subscription. We give you 30. Here you can see this thing looks to be stretched here over the last 2 years. Sellers emerging here. Look at the 5-year chart. You kind of think, is there really upside to something that's already really stretched? Look at the 10-day volume profile. Buyers picked up right here, right where you would expect them. 30-day volume profile below. It's very, very clear when you have these supply zones drawn in, and notably we don't. The sellers are right up here. You can see that in this $153 range, and the buyers are down here below at 136. I would say pass on Morgan Stanley's call. That's my opinion, at least based on the charts. Where might there be opportunity? How about the bond market? Let's take a look at TLT. Now, momentum's positive here. RSI's at 55. MACD's got a positive cross. 2 consecutive daily buy signals. Now, what's unique about this TLT is many people don't trade with stop losses, and we encourage you to do that. Hold on to your gains. But some question that keeps coming up is, what if I don't? And I go down on the wrong side of this trade. We show you, use our tools, use our reports, dollar cost average back in. Look at this. We've been doing that. We're down 0.01%. So pretty much even here, pretty close to it. Any kind of upside move, and that turns into the black. Many of you said there was never going to be a possibility this trade would turn around. Upside target 96.40. We'll show you that. There's a huge breakout on a wedge pattern coming here. You look at the machine positioning. There's still some movement to the upside. We've got momentum. It's actually strong on the 1 month, suggesting that we've seen a short-term shift in momentum. And look at this. The 3-month window is negative, so there is definitely opportunity here, and this is one you have to look at the charts because it becomes crystal clear. As we take a look at TLT, let's zoom in over the last 6 months. What do you see? This beautiful right triangle pattern. Look at the volume profile under the last 6 months. What is that telling you? Buyers below where we got the supply zone. What's the breakout? Well, you want to see the next trade 96.40 here. Why? Because this is where they're short. Then they're short here, and they're short up here. You get a price move here. These short sellers come out, drive price up. The short sellers get worked out, price drives up. You're now hitting that 157 mark with the potential then to eventually break out under this 108.60. You're looking for a much easier trade than chasing the U.S. equity market or perhaps energy, as Morgan's recommending. The chart set up on the bond market tells you the rates here are likely to come down. Now, I know a lot of people don't believe that, but indeed, that's what the charts are telling us. Let's take a look at gold. This thing is now back to me making new all-time highs. This is crazy. 29 consecutive daily buy signals. The reason I say that, if you're going to trade, a lot of people like to trade things that are high and are rising. I look for things that are low and beaten up and have upside potential. But this one got me wrong. I didn't think it was going to happen. Many of you said it was. Well, hats off to you. RSI, overbought territory. MACD, positive cross. Upside potential, well, sky's the limit when you're in breakout mode. And let's take a look at a quick chart of GLD. This thing is just going ballistic here. It's going vertical Mav. I mean, I don't know where this thing is going, but many people say it's going a lot higher, so we'll see. If you're trading it, adjust your stop loss level accordingly. One better opportunity would be GDX. Now, remember, we had a position on this. We got stopped out, and actually in a video to the subscribers, because we do like to do that, show you how to trade the signals. I told our subscribers, if it breaks above a certain level, you can play chase, put your stop loss level there. That was actually a smart move. Look at this. We hit our upside target. It's breaking out. 22 consecutive daily buy signals. Look, this thing's going to follow gold higher, even though we see momentum is stretched on it. Let's take a look at the chart of GDX, see where it's going, and we'll take a look at some other opportunities. So you can see so far the small caps, bond market. How about GDX? There it is. We told our subscribers if it holds above this volume profile line, take a chase higher and keep your stop losses fairly close on that. Next potential breakout here to 33.48 on GDX, likely to chase gold higher. Again, lots of great trade advice. It's why our subscribers are making money, enough in 30 days to pay for their subscription. You know what you can't do in 7 days? Pay for an annual subscription or a monthly subscription, any subscription. 7 days. How about this? Invesco, DBA, agriculture fund. This is fantastic. What a great trade. Many of you said, no way. Look at this, 18% trading ag, and I think there's a lot more upside in this. Target now 25.70. How did we do this trade? You say, what did you do? How did you get that? I showed you using our reports right in the show live. Here was the signals, here was the date, we put it in there, and bang, it works. That's the power of our tools. Why we give you 30 days to trade it. The other people, you got to sit in front of your screen all day long, push buttons, buy, sell, not us. Put your trades and go on with your life. RSI maxed out on the overbought territory. MACD positive cross. By the way, links in description for those 30-day free trial. Check it out. How about this? Bumping our stop loss level up. What a fantastic trade this turned out to be. And when did we take this? Back in December 18th. So what a wonderful return this has been. Let's get over here to DBA. There it is. Look at this. Thing's going vertical in a big way. And here's the thing, I normally don't care for things that get to that position, but we got into it early. And look, you start to look at this from a technical perspective, you're realistically seeing that this thing can get much, much higher. Up next upside target is 25.70. That would be right up here where the last zone of sellers are at. There's going to be some further catalyst. Where did we tell you to buy this thing? Oh, way down here. That's the key of our reports. We don't nail the bottom. Sometimes we get there a little before, but we certainly give you all the tools you need to be a successful trader. Because one thing that could send ags higher is soybeans. This one we put out to our subscribers as well. We had to buy it open on March 5th. We had other signals generated for our subscribers, up 3.57%. This in less than a month. In a trading month, what kind of return could you imagine? You do that every month? You'd be rich. How about this RSI 54? MACD's got a positive cross. Upside target, 100-day moving average. We showed you when to get in this when the machine positioning was deeply negative. Look at this momentum's turn around. The 1 month window's maxed out. Is there still opportunity in soybeans? The answer is yes, indeed there is. We showed you how to get into this thing down here and make some money. Look at this. It's finding that volume profile line at the 6 month window. Let's zoom in. I do not know what it's going to show. There it is. Buyers right here below trying to drive this out. What do these buyers want to do? Break through that supply zone and drive it up into the next one. Remember, this is a beautiful setup. And you see, this is the power of our charts and our tools. Is you see a bottom, what happens? This thing usually races up somewhere around the $29 range. We have you buying in here down around 24. Let's take a look at what we did. Yes, we had buy and open on 24.34. That would be an amazing $9 potential trade based on what we see in the charts. How about the dollar? Now, let's thing continues to roar. You think gold would be an issue against a rising dollar? Of course, we'll hear more from the Fed in the future, but many believe now are positioning for a stronger dollar. Momentum remains positive. 10 daily buy signals. We didn't take a position on this one, but that's okay because it didn't get into a deep short position like we normally like to see. But let's take a look at UUP here, see where this thing is going. Again, we give you all these tools every day. That is amazing. Show you the high probability trade setups, currencies, commodities, equities, you name it. This thing looks like it's going to run up to that 200-day moving average. There's little argument now. You see where, of course, why? Because it's where sellers of the dollar were at before. We look for a push higher here. Maybe something in the global market shift. We talk about the currencies going on with the yuan and the UN, and not the UN, the yen this last week. So any kind of catalyst could or send the dollar the other direction, but look for a short-term move. Maybe those other governments have some pain, do some devaluations. We'll see when the signals flip. Of course, our subscribers will catch those as well, and you can too. Links in the description below. Again, thank you for watching. I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.